Hello, everyone. This is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today, we're going to talk about, does your credit score determine how much property you can purchase? All right, let's go straight into it. So, of course, I know that we've been doing a lot of real estate videos lately, only because that's what you guys have been requesting. Okay, so of course, we talk about credit and we talk about what you can obtain with credit. And one of those goals that a lot of people look to obtain is property ownership, whether it's for themselves to live in or whether it's for you to buy and hold or whatever your goal is. Essentially, it's good to know information like this. So let's go straight into it. So your credit score doesn't necessarily determine how much property you can buy. That's really where your income comes in, okay? Specifically your DTI, which is your debt to income. We don't have to go into calculations just because every lender is slightly different. Obviously, there's state regulations and things of that sort, but some lenders have different thresholds. But the easiest way to kind of do it is I would say would be like to kind of keep things really simple. Like let's say 4, 4, and 4. The first 4 is $40,000 a year. Let's just say that that's your income, okay? The second 4 is $400 a month. That's your car note, okay? And then the third 4 is how much do you have in student loans? About 40,000, okay? So as long as your income equals your student loans, then you got a chance at getting approved for a mortgage. The question is just going to be how much. Every area is a little bit different. So you may be able to buy a $80,000 property where you live, and it's a nice home. But then there's some areas where $80,000 ain't gonna get you nothing. Okay. Then the same kind of goes with 200,000, so on and so forth. Okay. But using that example that I just gave you, as long as your income equals what your student loans are, if you even have student loans. If you don't have student loans, then honestly, you're in a better position just because you have less debt. Now, student loans still count against you, but again, it just kind of reduces the amount of buying power you have. So as long as your income is over the amount of student loans you have, or at least matching that, and yes, that goes for if your student loans, let's say 100,000, then I'm sorry, not 100, my bad. So 100,000. I'm on YouTube. So either way, 100,000. Then of course, as long as your income is like 80% of that, then you're going to be fine. But anytime your income is well under your student loan balances, then that's when you're going to have issues getting the buying power that you want. Obviously, if your car note's lower, if you don't have any student loans or your student loan debt is lower, if your income's higher, all that plays a role. Now, with your credit score, that's going to play a role as well, too. Now, traditionally, most banks will give you an FHA loan if you're between 580 and 620. Okay. Now, just because you got approved does not mean that you may or may not like the interest rate, depending on other factors. It's not that much difference, but it is going to be a slight difference. Okay. Just because you're in that score bracket. Now, not only that, but your buying power is going to be a little bit less because the risk is a little bit higher. Okay. Does that make sense? You have a lower score, so they're going to have you have a higher rate because obviously you're a higher risk, just like when you buy a car. But the difference is that if you don't necessarily like that buying power, there's a couple options that you have. Number one, you can always get a cosigner. I know who wants a cosign for you, right? I always like to make the joke, everybody sleeps with a cosigner. So whoever you're sleeping with, no, I'm kidding. So, but either way, that could be a cosigner though, right? Or family or whomever, right? And that's just an option. Obviously, option number 2 is make more money. Now, that may not be as easy as it sounds because, of course, now you got to quit your job, find something else, or you got to reduce your debts. Okay, sometimes that's the case too. Think about it. Think about that car note that you're paying. How was your credit when you got that car? Was it, and then of course, if your credit wasn't the best and it was like 2-3 years ago, chances are you could refinance, lower your car payment, get more buying power. I had a young lady that's a client of ours, and her buying power was like about 130, and I showed her how to refinance her auto loan. Which, by the way, what's crazy is that 90% of the people that we help locally don't even know about the YouTube channel. So either way, so I was able to show her how to do that, and her buying power went up to about like 175, I believe, and she was able to buy, obviously a lot more property. So lowering your car payment will help you, of course, buy more. I'm sorry, have a stronger buying power as well. Okay. And then, of course, if you're already a couple, this kind of goes into co-signing. It's not necessarily co-signing to help someone. That's when you have nothing to do with the property. But if you're living together already, then you guys have something to do with the property. I don't even really look at it as co-signing. You staying together anyway. You know, not trying to sound like a salesperson or anything like that. But if you're contributing to the bills, okay, you may want your house on your name on that property. That will, you know, if things go sour, you ain't got to just pack your stuff up and leave, okay? So all that plays a role, you know, with, you know, your buying power for sure, okay? So now, if your credit score is above 620, then like anything between 620 and 850 is going to be just based on your DTI in general, okay? And of course, if you want to get more buying power, you can always do any of the options I mentioned, getting a cosigner, paying off some debts, paying down some credit card debt. Sometimes I've seen people with a personal loan, and for example, let's say you took out a loan and there's like 3 payments left on the loan. That $300 payment or a $400 payment, whatever it is, it's best you pay that off because it's affecting your buying power. So look to see what you can pay off. Now, I do not recommend just, you know, saying, oh, well, I'll go ahead and pay off my car. I got $6,000 left on it. I wouldn't recommend that right off the bat, just because you can use that $6,000 liquid cash towards something else, okay? So just double check with your lender. Always double check with your lender. And if you're like, this lender might be trash, check with another lender, okay? So it's okay to check with lenders, and they don't have to, you know, run your credits and necessarily give you an answer. But if you want the accurate answer, you got to let them see the entire profile, and not just the credit. They need to verify income. Everything plays a role, okay? So again, if your score is between 620 and 850, then whatever your buying power is what it is, and you can adjust it by those things that I just mentioned. But do understand that your buying power is going to be a little bit less potentially if your score is between 580 and 620, because again, higher risk is going to be a slightly higher rate, and it's going to be a slightly lower buying power, at least based on my experience as a real estate agent with clients. That doesn't happen all the time, but again, it's best to prepare for that. But and of course, that means the opposite is true. Just because you're a 650 and you say, well, I'm gonna get my score up to 750 so I can buy this $1 million home. That's not how it works. They're gonna make sure that you still can afford it. Okay, it has nothing to do with your credit score. Credit gets you gets your foot in the door. Credit gets you the approval, but your income gets you how much you can get approved for. Does that make sense? I hope it does. Hope you guys like this video. If you do, of course, like it. If you want to share it, share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you all so much. Have a great day.